Hello, everyone, and welcome back to another episode. I'm your host, the Millennial Investor, and today we are going over my number one investment. We're going over the stock that makes up 9% of my portfolio. It did make up 8%, but now I bumped it up 1%, and I'll be going over my changes at the end of the video. But basically, this company now makes up almost double digits in my portfolio. We're talking about Broadcom, the company that raises its dividend at incredible levels, has incredible share price appreciation, awesome financials, and overall set up very well for the next decade for growth opportunities. So in this video, we'll be going over a lot of different pieces of information with Broadcom. If you wanted to know all the basics and just general things you needed to know about this company, we'll go over all that in this video. So go ahead and stay tuned for that. And if you're not familiar with me, I'd invite you to subscribe. I'm the Millennial Investor, and I track my annual and monthly dividend income through these charts, as well as my portfolio value and my monthly YouTube income. I disclose everything on my channel, including my portfolio that I had, my buys, my sales, my dividends, all that stuff. And if you want to get signed up with the brokerage that I use M1 Finance. Go ahead and be number 60 to sign up with my referral link that is down in the description. If you sign up and deposit $100 to the platform, you get $10. And if you want to invest in my pie for yourself, that is also down below, as well as other things like mentoring calls, Yada savings accounts, and credit card referrals. But thank you guys for tuning in, and let's go ahead and get started with my number one investment. As you see here, I'll go ahead and show you guys. I haven't seen it before. It now makes up 9% of my portfolio right here, my number one investment. And the reason why this company is my number one investment is for the following. And I just wanted to mention real quick, if we go to my activity, and I want to go to my first purchase, the first purchase that I ever made in this portfolio, we're going back to April 3rd of 2020, so during the pandemic. When I was buying this company, I was not threatened by the pandemic. I was not threatened by the coronavirus. I was buying this company like crazy at $237 a share. Today it's in the 400s. So today it's much higher than that, but even at these levels, even in the 400s, I'm still buying it like crazy. This company could go up to $500 a share, and I would still be buying it pretty steadily, especially after the news that I just received yesterday. So let's go ahead and give you an idea of what this company does, just give you an overall just basics and some bullet points that are really important. This is Broadcom at a glance. The fiscal year 19 revenue of $22.6 billion. So this is not a small company. This is not some speculative company that you've never heard of. You're looking at a $166 billion company. This is one of the largest companies on earth. Well, in my opinion, I think considering how hyper growth and how large this company is, it is not talked about nearly as much as a lot of its competitors. Now, it has $22 billion in revenue in 2019. In 2020, those numbers are higher. 2021 expected to be even higher than 2020's. And then what's so important about this company is these two bottom bullet points, which I'm about to get to. One of the industry's broadest IP portfolios with 23,000 patents. Now, these little bullet points were made about 6 months ago, maybe a little bit further out, so a lot of these are not updated down to the point, but I think that they have more than that now. They have over 23,000 different patents between all their different microchip products and their software development. This company has an incredible amount of patents, with 23 of those in category-leading semiconductor and infrastructure software divisions. And this has, most importantly, this is the number one reason why I'm so bullish on this company. If you were to take everything around this company and just throw it all in the trash, and if there was one reason why I had to give you that is so bullish around this company, is that not only are they set up very well for the future already, this company invests so much of its money into R&D, research and development. This company is coming out with new, better, brighter products and more profitable products every single year. And that's what's happening when you're investing about $5 billion back in your own business. The company also has a very long track record as well as buying out and acquiring other smaller businesses that are very profitable to help grow the company as well. But that's just Broadcom at a glance. And let's go ahead and keep on going further. Let's go to the next one. This is another reason why I'm so bullish on this company, is that this company makes a large part of its revenues and profits from its semiconductor business. It makes microchips for a lot of customers, primarily getting a lot of its revenue from Apple. Now, Apple does not make up such a gargantuan amount of its revenue that if they were to cut it to zero tomorrow, that they would just be screwed, they would be out of money. But they do make up, I believe it's around 20% of their overall revenue. So it is a pretty high amount, but not anything that would like bankrupt the company if Apple were to decide to move away from Broadcom. Now, as of the beginning of the year, so this little update is about a year ago, so notice that it's changed a little bit, but core semiconductor, i.e. their microchips, made up about 46% or about half of their overall revenues. And then 30% came from the infrastructure software, and 24% came from their non-core semiconductor solutions. Now, why this is so important, and I'm about to show you some recent numbers that just came out last night, why this is so important. This company is transitioning more from its old school model of just making microchips, where it was 60, 70, 80% of its revenue, and the infrastructure software is becoming more and more of that revenue pie. It has now become diversified to where not only do they make the microchips, they also have tons of different software products that they sell to its customers on a recurring basis every single year as well. And we'll get to that in just a second. Now let's go ahead and look at how this company is set up for the next decade or so, okay? It's hard to look into the company's financials and its opportunity for the next decade. That's a long ways out. Well, you can see that a lot of things are looking up and up for this company, okay? Now you see how 1G, 2G, 3G, 4G, 5G, how it just gets better and better. And in 2021, 2022, 5G is really going to begin ramping up. And not only for their microchips, but their software solutions as well, has a lot of opportunity to take advantage of 5G. And this is where the revenue growth and the profitability opportunities for Broadcom is really going to begin stepping things up. Now, 5G is something that has a lot of benefits to it over 4G, and I think once this really starts to roll out, 4G is pretty much just going to get left in the dust once this really starts to take place. And in the same way that 4G did it to 3G, 5G is going to be doing the same thing, and Broadcom is set up perfectly for this opportunity. Now let's go ahead and close out these, and I want to talk about another opportunity. Something else that is coming here in 2021. It had a little bit of a delay due to the coronavirus, but Wi-Fi 6 versus Wi-Fi 5. Now, Wi-Fi 5 is what a lot of routers are on today, and now they have the new generation of Wi-Fi routers coming out in the next year or so. They're going to start rolling out, and guess who makes a lot of the microchips behind Wi-Fi 6 routers? You're looking at them, Broadcom. They're the ones that make a lot of the hardware behind these products, and Wi-Fi 6 is a lot better than Wi-Fi 5. If you want to pause the video and look at some of the bullet points right there, go ahead and take a look at it. But Wi-Fi 6 is another big opportunity for this company that is already going to be happening in 2021 and 2022. Now, last but not least, the little last bullet point and last picture I want to show you here. This is more of a speculation. There's nothing proven behind this. There's been some rumors, there's been some talks about it, but there's been talks about the potential for this company coming out with microchips to help develop driverless cars. Inside of the microchips will be technology that will help driverless cars function. I do not know this. This is all speculation, so do your own research, find out your own information. But there's opportunities here, and this is why I talk about the research and development. These are the type of things that we have no idea about yet. This company could fully take advantage of this opportunity. It could miss it completely. But when you have a company that is constantly, 365 days a year, investing relentlessly into new technologies and new products, opportunities like this and many others that we can't see out into the future gives Broadcom a great standing to take advantage of these kind of opportunities, okay? So that's just an opportunity there. Maybe they have something with driverless cars over the next decade. That's just another bullet point I want to point out there. Now let's go ahead and talk about the revenue numbers and the profitability and the dividend and all that stuff that they just came out with last night. So they beat earnings per share by 15 cents and they also beat on revenue as well. Their fourth quarter non-GAAP EPS came at $6.35, beating by 15 cents. GAAP EPS of $2.93 beats by 56 cents. Revenue came in at $6.47 billion, which is roughly an 11.1% year-over-year increase, which was also a beat of what analysts were expecting. They also beat last quarter as well. I'd probably want to mention that too in case you forgot. And what's so important here are these last two bullet points. Because in case you didn't notice, if you're not familiar with me, I'm a dividend investor. These 24 companies that I own are all dividend companies. And a lot of these you probably already noticed by name because maybe you have a lot of them in your household or you purchase some of their products and services every single day. But with Broadcom making up my number one investment, what's so important to me as a dividend investor is their dividends per share and their free cash flow. And their free cash flow is ridiculous for this company. The amount of free cash flow that this company produces is incredible. So $6.47 billion came in revenue, and free cash flow came in at 3.25. That is over half of the revenue is being converted into free cash flow. Now that free cash flow can do tons of different things. That can fund future dividend raises. That can acquire smaller companies. That can buy back shares, which by the way I haven't mentioned this company also does. They can do more research and development. There's all different types of opportunity when you have free cash flow numbers like this. And speaking of the free cash flow numbers, they destroyed estimates. The estimate for the free cash flow was 2.67. It came in at 3.25. So you're looking at about a 600 million free cash flow beat roughly in the quarter 4 of 2020. And then they increased that dividend, I'll get to that in just a second, of 11% of $3.60 from $3.25. Now, they also have quarter 4 earnings where it topped the estimates, and then they also announced a new chief operating officer and Chief Financial Officer. If you want to look more into that, you can go into that. I'm not going to go into those guys, but those are internal promotions. Both of those guys have already had very high leadership roles inside of Broadcom, and they're basically just getting promotions into new roles. So go ahead and look into that if you're interested. But what's cool here as we read along is that, yeah, they beat their revenue numbers of 11%. They had their net income rise, they had their EBITDA rise, and all that stuff. But if we scroll down these two little things that I highlighted, this is what I said what was so important. Not only did they have that incredible cash flow, but this bullet point right here, revenue by segment. Because not only are they increasing revenues, their software sector is growing rapidly. This is a very high growth category for Broadcom. Now remember, you know how I said that this infrastructure software business is growing much faster than their semiconductor business, which is what I want. As an investor, I want this company to transition more into a software company than a hardware company, okay? So that way they can adapt more to the consumer trends as we get further and further along because, hey, technology adapts very quickly. Now let's go and look at this. Revenue by segment. Semiconductor solutions, i.e. their hardware, grew 6%. Okay, that's steady growth. I'm happy with that. That's great. Their infrastructure software, which is what I'm looking for. These are the numbers that I want to see. Went up to 1.637 billion, up 36%. So I just want to show you that their software is growing literally 6 times faster than that of its old hardware microchip sector. This is growing 36%, but their hardware is growing 6%. So this is what I want to see. So as we get further and further along, I think that this infrastructure software and its non-core semiconductor solutions will begin to make up more and more of this pie. And I'd eventually want to get to the scenario where this company has its revenues only making up 30–40% coming from hardware. That way it's not as reliant on one, not reliable on its number one customer, Apple, but that and it also can transition, have a lot more higher profitability through its software products. And one thing I want to mention here, if you're happy to reading this entire page that I'm showing, something else I just wanted to mention just really quickly, its cash and cash equivalents went down roughly from last quarter, about $1 billion. And what's so important to that, you might see that number and think, oh wow, their cash went down. The reason it went down is because they paid down their debt. They're now not as financially leveraged as they were the previous quarter. That is one of the only negatives to this company, is they do have a pretty substantial amount of debt, but they just acquired two multi-billion-dollar companies, and that's the reason why the debt is so high. But this company has that finance over a decade out, and this company can easily pay that off through its incredible free cash flow over the coming decade. So I'm not really worried about that at all. Now, what's so important here is that they're focused on the research and development and the software sector, and their CEO can prove this. So I'm going to read what I have highlighted here. This is what their CEO was quoted saying last night. Turning to software, he says, let me reiterate our business model here. We focus, as we have said many times, only on the largest enterprise customers and seek to increase their adoption of our software products through a hybrid model, about 90% of which are recurring subscription revenue. Now, I want to stop real quick before I read any further. Everybody knows that the subscription model is just the way that everything's moving. Everybody wants to be subscription, right? This company has about 90% of its software customers recurring every single year, okay? We have stepped up investment in R&D. So these numbers are actually, wait, I'm sorry, let me find it. These numbers of 4.7 billion are actually lower than it's at today. Today it's over 5 billion. So now they're investing even more into R&D. Okay, let me go back to what I was reading. We have stepped up investment in R&D focused on just these core customers, and we are able to do that by spending much less on our go-to market outside of our large core enterprise customers, unlike obviously the other software companies who are chasing every last dollar of revenue, don't matter how much it costs. Though this company is not just focused on beating the top line. This company focuses on the bottom line as well, which at the end of the day is what I'm very, very focused on. Because as a dividend investor, I don't care about revenue nearly as much as I care about the bottom line. I would rather a company only grow revenues by 2% a year, but increase its profits by 5% rather than the other way around. I would rather do that than a company that's increasing revenues by 10 or 15% every year, and then it's just barely increasing profits or even losing in profits. This company focuses on the bottom line just as much as the top line, and as for me as a dividend investor, that's why this company is perfect for my strategy, my dividend growth investing strategy. Now, I'll go ahead and close that out and I'll mention, and then last but not least, as a dividend investor, something that I want to see is frequent dividend raises. And the funny thing is, in the pandemic, a lot of these companies have either stagnated their dividend raises or raising them very small amounts. We got a 2% raise here. We got a 3% raise, a 4% raise. And then some of these companies have even been a little bit more bullish and raised 6, 7%. And like, for example, Visa the other day didn't even raise their dividend 10%. And this is supposed to be my hyper growth stock. This is supposed to be the company that raises its dividend 10, 15, 20% every year. And so far, Broadcom has been the only one that has raised its dividend by 10% plus. And they raised it by about 11%, going from $3.25 a share up to $3.60. And in case you didn't know, the amount of growth that this company's dividend has seen, you might be saying, okay, $3.60 a share is quite a lot. Well, 5 years ago, it was only paying 44 cents. This company continues to focus on shareholders from a dividend perspective, going from 44 cents to 49 cents to 50 to 51 to $1.02. That's a double up, by the way. $1.02 to $1.75, a massive increase on a percentage basis. $1.75 to $1.65, another huge increase. And then a 20% raise in late 2019 from $2.65 to $3.25. And now we're looking at about 11% raise from $3.25 all the way up to $3.60. Now, last but not least, before I end this video, when I want to show my 1% change in the portfolio, I did bump this position up from 8% up to 9%, back up to my number one holding. And we did have to sell a position. And the position that I sold was a direct competitor to Broadcom. Their competitor was Qualcomm that I sold. I was up a massive amount on this company. I believed I own it at around $70 a share. I was already doubled up on this company. The valuation in regards to the PE ratio was much higher than that of Broadcom's. They're also much heavily reliant on their microchip solution, and they have almost all their revenue coming from one customer, that of Apple. And there's potential for Apple to try to move away its products from Qualcomm to making its own solutions, but regardless, that's not the point. This company also has a dividend that's only about half that of what Broadcom has to offer, and its dividend growth is not nearly as high as that as Broadcom. And that overall, guys, flat out, I'm more bullish on Broadcom. I've had some incredible profits in Qualcomm, and I wanted to invest in it to diversify a little bit when I first started the portfolio back in April, and when this company was trading at $70 a share. If it was still in the 70s, the 80s, the $90 a share, I would still be owning this company like crazy. But I mean, look at this chart, guys. This is ridiculous. I'm buying this company at $60, $70, $80 a share, and today it's at about the 140s, okay? This company's literally doubled since I started investing in it 8, 9 months ago. So with that said, I went ahead and took some profits, and guess what I did? I took those profits and I reinvested it right back into my underweighted holdings, because a lot of these companies that we bought are at incredible valuations, not only including Broadcom, but like McDonald's is trading at a good valuation. Realty Income is an absolute steal right now, as well as my other real estate investment trust, WP Carey. This company yields over 6%. I'm going to say it again. This company yields a dividend that is over 6%, as well as some other high blue chip names like Visa and Lockheed Martin and Procter & Gamble and Waste Management and Kimberly-Clark, which is at a great valuation as well. I think that I reinvested this portfolio much better than just holding the money in Broadcom, and either way, it's not going to make up a massive difference because it's only 1% of my portfolio, so whether I'm right or I'm wrong, it's not going to have anything that's super dramatic. But what's more important here is that when I bump up my position in Broadcom, is that not only will next week's deposit be more invested into Broadcom, but on my future deposits in the coming months, in the coming years, we'll continue to invest in Broadcom more and more and more, and we're about to have a $1,000 position in Broadcom. That's where we're headed. We're about to have $1,000 just in this one company. So this company is going to continue to have share price appreciation. This company is going to continue to have dividend increases and lots of other research and development and innovative products, as well as a competent CEO, Hawk Tan. I am super bullish on this company. If you're not invested in it yet, I'd recommend you to do so. I've been saying this since this company was in the 200s, and I'm going to keep saying it in the 300s, the 400s, and maybe even next year in the 500s. If this company goes down, if it were to go back down to the mid or low 300s, I would begin buying this company at insane rates because I am super bullish on Broadcom. So thank you guys so much for watching all the way to the end. I invite you to subscribe if you haven't done so already. You can watch me update these charts every single month. And go ahead and subscribe for M1 Finance and get that free $10 and be the 60th person to sign up. And as well as check out my portfolio and other stuff down below in the description. But thank you guys so much, and I'll catch you guys next time.